Testing. All right. Hello, everybody. This is Jamie Sadley right now. This is we'll call it the end of week strategy webinar, and it is first week of June. So before we dive in, please let me know that you can hear me. I was having some problems with the mic earlier, setting things up. So let me know that you can hear my voice. All clear. Okay, great. Well, we are going to start with the dollar. So, assuming that you read the report yesterday, and I thought it was interesting, of course, what had happened with Euro, with the 8 days up and all that stuff. So let's take a look at DXY. And we'll look at both that and US dollar because they were a little bit different today. Sharab says we have gold and silver loans. You bet. We absolutely do. I will look at that. I'll look at whatever you'd like, really. Just let me know. So we have DXY on list, and we'll look at US dollar first, those two. So really the thing that I'm following the closest here are two channels. One's obviously from like way back. Let me get this a little more precise, should be up here. Okay, one's from the 2011 low, right? And that red line there, that center line of that channel is really important. Ideally, we would, we get like a snapback rally into that level, maybe, over the next couple of weeks or something like that. And then you have the best short entry for the dollar that we've seen in years. I say that because look at that line and some of the moves that have come off of it. So this was 2014. That was when, that was really the huge dollar blowout. And amazingly, here we are in 2020. And this was, the beginning of the topping process really for the dollar way back in 2015. Okay. Pretty incredible, actually, that's when we started this topping process, or what I believe is a topping process, I should say. So again, fast forward. So there's the touch there, right? Touch here, 2017, right? Breakdown. And then when we got back above it, it was really great support up until like December of last year, and we started to break down. And then things just got super messy, right? We had that rally higher, the big break lower, which a lot of people, including myself, thought was the break. Then we had that big surge, and now it looks like we are finally maybe breaking down. Bottom line, we are into what I would consider a level, or pretty close to a level. It's actually clearer on Euro, as we'll look at in a second, but you can see the low down here from January, essentially your year open, and then December right here, right? So, a bounce, say upwards of up here, would be perfect if we were to get something like that. That's at least what I'm looking for. Let's take a look at a couple other things here. So I want to look at, I actually am doing this with you. I haven't gone through some of these things today in terms of like where the year open is for DXY. So there you go. Okay, so I mentioned year open, and sure enough, look at that. Year open, it was tagged today, right? To like basically almost to the tick, and we bounced. So that is promising in terms of, looking for maybe a bounce in the dollar, okay? So that's big. Let's look at volume and see if we got what kind of volume we had on DXY. So I know that we had 42% higher volume on average than the 20-day average on the Euro futures. We had 1.36 on DXY. So what we're going to do with this is I want to see how many times we've had reversals of this magnitude with this you know, with the reversal logic that we have. So yesterday was 1.86 times, and today was 1.36 times. So what I'm going to do is I'm just going to say the first day, let's put it over 1.75, and the second day 1.3, just to kind of round it out. And you have some false signals to be sure. Let me make sure that you don't have. Oh, there you go. That's what I'm talking. Actually, okay, that gets rid of a lot of the things that I was talking about. Okay, so we haven't had a bullish one like this with this magnitude of volume since 2015, amazingly. That's pretty crazy. Let's see if we bring this threshold down to 1.5. So there's one there, and there's one there in March 2014. Other than that, you've got to go back and get a bunch that weren't great here. They actually had a good one in 08, 2006. There was one right there in 2003 that was pretty good. That was a really good one here. So you get what I'm saying. Like, we have all the ingredients there for a bigger bounce in the dollar. And again, this is DXY, so this is going to be more specific to euro. And I head into next week, obviously wanting to short the euro. So let's go right there. So euro, again, euro, we had 1.5, 1.4. We'll go 1.4. Just to see how many we can get. So euro, here's that bearish reversal today, right? And again, my volume reversal logic, I'm sure you guys all understand that. You know, I've talked about a decent amount. We haven't had a whole lot lately, just during this kind of this big trending phase, but the idea is that you get a big volume day into a higher or low. Like yesterday was a big volume up day, right? Well, the immediate following day, the day immediately after that big volume day, you get to move in the opposite direction, also on high volume, right? The logic behind this is that you catch people at bad prices, right? So you get a reversal with volume. You can see the last one we had was bullish over here. We had a bullish one here. We had a bearish one here, which has been early 2018. That was obviously a very good one here in 2015. You can see the bullish ones. Last bearish one was over here. That was in 2008. Actually, funny enough, I was kind of looking at this rally here as kind of similar to what we were going through now. So that makes some sense. Other ones, you actually had one here in 2004, which would have been okay. Here, not great. Here would have been okay. So we've got some decent, or a decent signal, excuse me, on euro. So if we change the threshold to 1.75, which is what we've got, that limits it to only 1, 2, and 3 today. So that's it. 1, 2, 3 bearish reversals, okay, of this magnitude. So this is an important turn here. And then again, the 8 days, I'm not going to reproduce that right here because there's really no need to. But you know, if you go to yesterday's post, right, you can see the times when we had 8 days up. So obviously today was a down day, so we're going to stop at 8 days, right? So boom, 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 and boom, boom, and then yesterday, which is not shown on this chart, but you get what I'm saying. Okay. All right. So euro, we want to sell it. So we want to go into tomorrow, or into Monday, Sunday, what have you, with the following game plan. So there's the reversal. I'm going to go hourly chart here. The high volume level from this actually was not from, it was from yesterday, actually. It's right here, right? So you can see that volume right there, that big volume bar, right? Our resistance, our pivot, and that is at 113.44. So if we get a bounce up to there, we're going to be shorting, call it 113.40. Funny enough, 618 is 13.43. Okay. Hold on for 1 sec. I'm sorry, hold on. All right, so that's our idea. We're going to be shorting 1340 on euro dollar. And in terms of support moving forward, probably going to want to use some sort of a VWAP for that combination, but I would not be surprised to see us come all the way back, maybe into 110.80 or something like that, which would be the center line. If I throw up a really short term, this shorter term steep fork, I think we went through it. We might have come back down into it. Yeah, we did. But that's going to be down a little more like 1160. So either way, just worry about the entry right now, and we'll see, you know, what kind of downside we get. But hey, you could get all the way down into here. You could get all the way back down towards that 110.80, 111 area at some point. All right. Okay, so we spent a lot of time there on euro, but it's well deserved. It's a good short heading into next week. Here's cable, which was really strong today. And it's a really great chart in terms of the forks that we've got going on here. So get rid of this and this and this because we don't need it, and this and this and this and this. All right. So you've got this fork, and you've also got, we could also draw a channel from the low way back here, right? And you're going to get I love confluence. When you get confluence channels, those are the best. And if you were to say put up, I still think that this is going to be the level, this blue line here is still going to be the spot at which you're probably going to get an opportunity to buy pound. Thing is, you know, look, I'd love to see us go test that 128 area first, right? I know I talked yesterday about taking out this high and then maybe pulling back. I'd just like to see this taken out because, or tagged, excuse me, because that would confirm, if you tagged it, that would confirm the channel from the low down here, right? You've already got the fork over here from the September low, but I'd love to see this confirmed, because that would really give confidence on buying weakness into this level. Either way, very clean, and the levels to pay attention to as we head into next week are going to be about 128, 2030, and I would say that 24.85 area is going to be crucial in terms of support, okay? And I would like to actually pull up seasonal studies here, because so let's look at pound. So yeah, pound is still, again, in a very bullish, for the most part. Really the next 2 weeks are bullish on, say, all look back periods. When I say look back period, I mean, you know, the seasonal tendency, red would be the last 30 years, right? Green is 5 years, 10 is black, and then magenta would be 20 years. So you can see that over the next 2 weeks to right here, they're all bullish. Then they start to diverge a little bit. They kind of get negative, but then the longer term continues higher while the 5-year goes down, right? Because cable has been weaker over that period in the last, say, 5 years than it has over the last 10, 20, or 30. So either way, winds at your back still for the most part in the coming weeks, and maybe even through July, in order to basically just, you know, buy dips in cable. All right. I actually want to go to dollar yen for this very reason, for seasonals. So this is important. We have a seasonal top this week in dollar Japanese yen. right? So here's why that's so big. So not only do we have kind of a price pattern, but we also had a 4-hour volume reversal on Japanese yen today. So that would be 2, 1.5. All right, so what we're going to do is put in 2-day reversal, volume reversal 2-day, and we're going to make that 2. That should be 1.5, not 1.2. Okay, so here we go. So look what happened here today. Again, this is Japanese yen futures. I always, need to say that because people are like, wait, you got a bullish reversal. It doesn't make any sense. So, this is the inverse of yen itself, right? So that seasonal turning point, and guess what? Here we have a reversal today, 4-hour. You can see the prior ones, some pretty good ones. Had an amazing one back in February, right? Had an amazing bearish one back in January, right? Even these were not terrible, right? In terms of identifying near-term turning points. And then this goes back to last June. But yeah, you can see we've got that combination here of the volume reversal along with the seasonal turn lower, along with right here. So there is the chart for dollar yen. Beautiful where that circle is, isn't it? Okay, so we went to the top of the channel. Perfect. This is actually a fork, but you can see how perfect. We actually had to order to buy one. We didn't get triggered, missed by like, I don't know, 5 or 6 pips, but yeah, right into this level. So this looks like a very bullish pattern, right? A huge breakout. Point is, I would respect potential for a failed one, given everything I just said. Their volume reversal, the seasonals, obviously this level, wouldn't give it much room on, a stop, maybe give it above 110 or something. We'll see heading into next week. And also dollar yen might not be the best one to trade at this point. I've showed a bunch of Aussie yen charts of late, just very extreme into big levels. So maybe we can take a look at that in a sec. Hold on here. Aussie's been an absolute beast of late, and frankly, it's gone through pretty much every level that I would have expected us to fail at or near. I don't have much else to add to that, really. So where did we go today? We did not quite take out the high from end of December, but what we did do, and I did post this on Twitter earlier, and this is really all I've got to offer at this point on the Australian dollar, is the fact that we took out, or tagged, excuse me, the yearly opening price, which is right there. So we opened the year at 70.15. Today's high is 70.13, 2 pips, good enough for government work. And RSI is above 78. Let's do a quick study and see instances of RSI above 78. We'll do a custom, and I will say RSI is greater than 78, and we will make it that color, and we will make it there. Okay, so there's one. And then you've got instances over here. So that would have been into the run up into January 2018, kind of went for a while. Here also went for a while. And other than that, when you had There's a big one up here. That was 2011, April. You know, bottom line is like we're closer to a high than a low, in my opinion, as far as, you know, where the next trade is. Now, we haven't had, you know, a signal in Aussie, and that's what I'd really like to see, obviously, you know, to actually say do something. But yeah, we have not had that yet. You know, not even on like a 4-hour chart like we had with Aussie, you know, obviously daily on Euro. So as far, you know, for now, I'm just gonna kind of sit tight. You know, Aussie, if we get a short-term pattern that starts to make sense, you know, like a good, you know, sharp impulse lower, then, you know, we'll look at it. But yeah, Sarab says, do you use a 14 or 28 time frame? So I use 14 RSI for every time frame I look at. Just always have, never messed with it really. There was one time actually when I used a 21, but it's too slow. So yeah, I use 14, just kind of the default setting. You know, I do know people that have had success using it, you know, like a really short-term time, like a really short RSI, short-term RSI. Last thing I'm going to mention on the Australian dollar is the 618 retrace. Get rid of all these things. The 618 retrace of the drop from back here in 2018, right, is actually 71.30, and you've got those big lows there at 71.45. So that would be an area to pay attention to if we do continue higher, like immediately. Otherwise, really focus is within this channel that was posted a couple of days ago, you know. You know, this is the shift channel, and this is just regular trend line. But, you know, you'd love to get support down there, 67.50 at some point. I don't know, we'll see. So yeah, I don't see a whole lot to do with Aussie at this point, but Aussie yen is a different story, and we'll look at that in here a little bit. All right, so let's go to Kiwi. Kiwi, pretty clean in terms of its chart channel, right? Cleaner channel than the Aussie is actually. We're just right around, you know, kind of trading just above that big high and just poking through that channel today. Starting to get some 4-hour wicks here, right? You can see over here, and I do think that we actually had something on the 4-hour time frame, or even an 8. No, it was a 4-hour time. Okay, so that was a spike bar, so it was a 1-bar reversal. And it was a 1.8. So we'll go 1 3/4. All right. So you can see here instances of this. We actually have one over here, totally false. Never got any follow through. You had some over here that built up into the top, actually into December. Here, never follow through. The exact low, not bad. Over here, pretty good. Over here, not terrible as far as getting some sort of a head start on your position. So yeah, you know, Kiwi, again, confidence isn't huge here, but like with Kiwi trading at the top of that channel, you know, and having the volume reversal, like I'm okay with maybe attempting something on the short side next week if we start to get, you know, a little bit of weakness within this or from this channel. So we'll see. All right, CAD, dollar CAD. Interesting one here as well. So we had this chart from last night. I believe I put a daily chart in there. I think we got just about to the lower parallel today, almost, not quite. We did fill the gap from March 6th. We did tag the September high, okay? So, we're kind of in that vicinity as well for the Canadian dollar, where I'd start to pay attention or alert you of any reversal bars that occur, notably volume reversal bars. So we haven't had that yet, but again, we'll be on the lookout. Now let's go to some of the other crosses that we've been looking at of late. So we had Aussie yen, right? Okay, so Aussie yen continued its ascent today. Again, still more or less at a really big spot here. I mean, we closed 76.34, and really the 76.20s to 50s is huge. Magenta dot there is going to indicate RSI above 81.5, and that hasn't happened too much. Back here, September 2014, big drop from there, right? The only time when this really would not have worked out for you as far as fading something this extreme would have been that 2011, 2012 run, which is when the Japanese yen just got completely murdered across the board during kind of like their, Abenomics thing. But even then, like, it worked a little bit. Like, here's a couple of days down, it would not have worked here. But again, that's what stops are for. We continue to look back. You can see extreme RSIs. I mean, we haven't had hardly any like this. And when we have, big top, this was back in 2005. You had basically a 10 handle, almost 10 handle. It's 1,000 pip drop in Aussie yen after that. Here, pretty good. Jan, you get a trade off of that. Jan 02. And I think that's it. Really? Yeah, I think that's it. So, heading into next week, I do, like, it's funny, like, I don't like necessarily trying to short the Australian dollar. I don't have a setup, but given the extreme nature of Aussie yen and its RSI, I'm down to short or attempt to short that one, right? And like and also dollar yen. That's, I also like the fact that that would be embedded in Aussie yen. So like, how would I look to short Aussie yen? So let's go to Aussie yen here on this chart. And again, it's also at the top of a very, very steep channel. Okay, if we were to break through the top of this, then I would have to move the upper parallel all the way out here. Okay, and then you would be looking at something more like up here. Okay, which might be the right thing to do. I don't know. Either way, how would I look, to short this? So let's go to a 10-minute chart. So pretty simple. So here's this channel. This is just going to be from the June 3rd low. Let's say you get a drop here next week, right? About 76.10, and then you get a bounce. Look to short on this line, which would be 76, call it 40.50. Stop above here, 76.80, which is like nothing. You're risking hardly nothing. And really, you're looking for probably 100 pips for the first support, and eventually could be a lot more, right? Given that extreme RSI. Those things can persist for a couple days, but yeah, that's where my head's at. All right, I've got to really get going here and start to get through some stuff. So I know that gold and silver were things that we wanted to look at. So why don't we look at metals, gold, silver, copper, crude, and then we will maybe look at some indices real quick, which have just been insane, and then I'll have to call it a day. But here's crude oil. This is the chart that I showed, I guess it was yesterday. Did have another update today that does not change the count. Sid says CAD yen, I absolutely will. What I will pay attention to next week, though, is 41.05. That is the gap All right, so the close 41.28 is the uncovered close from March 6th. Okay, so pay attention to that level. I noted USO in the piece yesterday as well. You can see here, here that is, and that gap is going to be 30.08. Okay, so that's 30. Actually, no, it's not. It's 30 on the dot. So 30 bucks. And as I noted, if you pulled back from there, you'd probably be looking for support around 22, high 22s, highest volume level, USO, that VWAP. So still thinking something like that in terms of crude. Gold actually, so let's go to GLD or gold. I will look at both. So for me, this has been a consolidation top. Okay, that's just all there is to it. We have not broken the horizontal, but this, I'm not considering this a bullish triangle anymore. I get, you want to get real fancy about it, I guess it could be some sort of a complex correction or something, but yeah, bottom line, we're starting to break down. The consolidation top target, you just take the width of this and extend it down. You're going to get 1544 about, but obviously you're going to want to pay attention to the high here from September, which is 1566, okay? Okay, here we go. All right, here's XAU USD. So this to me actually is a head and shoulders top. It's pretty ugly. You got two shoulders over here, head, shoulder. And you also have a fork that may come into play at some point, right? We haven't tagged the center line yet. So once that happens, it's confirmed we can trade it. But I do lean to the short side. And I would put resistance basically back there. So that would be that high. The XAU chart, the spot chart's actually a little cleaner to me in terms of trading it as a, from the bear side. So that high intersects that former triangle line right there at 1703, 1703.22. I'd look to short that, okay? And I'd be looking for support eventually, could be down here at 1560. That would be, kind of my ultimate level, I think, for a swing. But I would also be looking at maybe 1605 as level. Here's why that level, the 1557 level is so huge. So if I go back, and this is going to get messy looking because I'm going to be on a, with all this crap over here. But if you draw a fork from the low back here in 2015, right, extend a parallel. See all that? Resistance, support, support. You can see how important that level is, and it intersects with the old high here, kind of towards the end of the month. So I do like the short side in dollar yen at this point, okay? Or sorry, in gold at this point. Okay, let's go to silver. All right, so silver, this is silver futures. I will look at XAG. Silver futures, again, this is the really long-term angle that we've had. Silver futures are going to come back to this level, and then you're going to want to pay attention. So we essentially took out a big horizontal, came off, 1610, 1620 is probably level that you're going to want to pay attention to. Near term, you might be getting something of a, of an impulse on the downside where you could potentially get a bounce. This is a pretty steep trend line. It doesn't look like it really on the near-term chart, but it is. In order to trade this, it's kind of tough. If you bounced here, I'd look at, the gold chart really is a lot cleaner to me. If you bounced here, I'd look at resistance up in the you know, up in this region here, okay? So 1817, 1833, but really a better way to trade it would probably be if you broke down and then came back and tested this underside as resistance at some point. But for now, if I'm trading, I'm sticking to gold right here, okay? If I'm trading metals. Copper, really important. Copper finally got to the level here and blew through the top of this, but look how huge this is. If I'm gonna go to a daily, 200-day average, underside of the trend line from 2008 and 2016, which by the way was support to the tick on February, breakdown, retest, here we are. If there were ever going to be a level to pull back from, you'd think this is it. Also, oops, just about 2 legs up where we closed. I want to see if there's a fork on here, a shift fork. So copper is really big and important because since the low, we've had essentially copper move the same as Aussie, as you know, stocks. It's all been one big risk move. So it's a good spot to turn lower from in copper. This is a shift. Not sure if that's the right one. I'd probably actually go with this one, just because of the support that you had there on the center line, but either way, doesn't really matter. You're just at a really important level in copper. All right. Okay, now I'll go CAD yen, and then I'm going to have to run. And I'll get this posted in the archive for the weekend, okay? All right, let's see. Why is my computer acting up like this today? What the? Sorry, my internet went out for a hot minute there. It's also the 618, which is nice. Okay, so CAD yen is what I said, right? Internet. What is going on? What a disaster. Okay, hold on. We're gonna go with a fresh chart here. Okay, here we go. All right, I'm gonna see. I would like to see where the channels come in from here and here. Okay. All right, so this is a shift, I believe. Yes, it is. All right, so that's pretty good. In terms of like, you know, holding the center line. Obviously, this, look at all those wicks, right? The whole point is, obviously, I know this is happening. The whole point is when I'm doing this, I'm looking to see where the angle is that the market's kind of respecting, if you will. So let's make this a regular channel, get rid of that one. And that's pretty good too. Actually, it's really good. So, okay, so what I would look at, this is CAD yen. I would look at this one here. You could fail today, frankly. I mean, you've got pretty good, you know, you got a low here. You can see that you did have some resistance on this 25 line here, right? And in fact, the 25 line and the 75 line have been active within this channel. Now, my bet is that support is going to be that's pretty darn steep, but whatever. I would look for support probably back near the center line, although that's really tough to say. So breakout. The thing you want to, so if we get a relatively shallow pullback, and you probably do need to watch this level for it. This is a pretty aggressive one. But worth watching, I suppose. You know, if you pulled back for, say, you know, a week or two, maybe you get down here, but throw just a regular channel on there first and see what happens if you come back to this level. So that's going to be 80, 10, right? That's the slingshot thing, right? Where you break out through the top of the channel, come back and test it. So what I'm telling you right now is that I do see us at resistance right here, okay? But if we pulled back, 80 is the first level to watch. If that fails, then you're probably talking, you know, more like, you know, back towards 79.12 or something. But either way, we are at a level, you know, could pull back. The one thing about this is the median line hasn't really done a whole lot, right? Except for recently when you did bounce on it here, and then we had median line acceleration crash. So perhaps that does come into play again. All right. All right, so I've got to run. Thank you all so much for attending the webinar, and I'll talk to you later. All right, have a great weekend. Oh, Saurabh's asked about SPX. I have no idea on SPX right now. Saurabh, I will look at this weekend. If I get some thoughts together, I will definitely publish it on Sunday night. All right, take care.